Let's go again. Can I talk about some Apple earnings right here? So Apple reported these earnings, and you can already tell just from this little after hours chart here. Bad boys up 1.5% after hours. Okay, nothing too crazy, but the thing's up. What can I say? What in the world did they report? Let's look at Apple, see what they have going on. So first off, obviously they announced they announced their dividend during their earnings. It makes sense, in line with previous. They're not due for a raise yet. No worries. It's perfectly fine with me. 77 cents per share. We're taking it. But let's look at these freaking earnings. Can I just say, let's go? This is ridiculously good earnings. Ridiculously good. EPS of $4.99. Oh my gosh. Talk about money printing. This company's printing money. They beat by 45 cents. That's insane. And revenue beat by $3.4 billion, up 9% year over year. That is a 9% growth on $90 billion. Holy crap. That's insane. That's so much money, and to grow by that high of a percentage, it's literally insane. I mean, you don't normally see growth of that kind. If you think about it, just by the law of large numbers, it's so hard to get a high percentage growth when you're dealing with numbers that large. It just is. But they absolutely crushed it out of the park. And I'm surprised this thing, I mean, obviously just because the recent run-up, I get why it didn't, pop, but these are ridiculous numbers here. Ridiculous numbers, and I'm quite excited. So let's look at some of the specifics here. One thing I do want to mention too, with an EPS of such, obviously there's been some concerns in terms of valuation for Apple, which frankly I don't think need to be necessarily a concern right now in terms of PE ratio, just because of the fact that if you're posting a 9% growth, I mean, you're a growth stock. Let's be fair. They're back into growth as opposed to being a value stock. Let's be honest here. So I don't think the PE ratio they're at, which is right now, is going to represent right around a 25 potentially. I don't think that's any concern. I'm not concerned with the PE ratio at least. So Ford PE ratio will go down as well from this. It's just lovely. So some of these numbers here, what drove it? Driven by iPhone and wearables. iPhone I already knew was going to be a huge success, as I called out. So iPhone revenue of $50.6 billion, which their consensus was 51.38. So they beat by, that's right, over $4.5 billion in iPhone sales. That is a lot of iPhones. iPads down from the consensus by around 0.75 billion. Nothing really. Some people might just say 750 million, if we're being honest, but we're in billions here. Come on now. Mac was right in line with consensus. Wearables, home and accessories, a $10 billion number as opposed to the 9.89 billion expected. And services, a little bit down from consensus, but $12.72 billion in services. Greater China revenue grew 3%, and there's a good reason why they mentioned Greater China. There's obviously a huge concern just now with the coronavirus. That's going to be what's on everyone's mind in terms of corporate earnings just for this upcoming quarter, so they had to mention something about China. It's just really how it goes. Operating expenses totaled $9.6 billion, but here's this lovely outlook, revenue of $63 to $67 billion, which the consensus was $62.47 billion, so that's way above their consensus. Fantastic freaking outlook too. That's insane. Gross margin of 38 to 39%, which is with consensus pretty much. Operating expenses, a little bit above the consensus though as well. So a little more expenses, but that revenue line is quite a bit above the consensus. So that's freaking amazing earnings. What can I say? They beat on all aspects. They beat the EPS, they beat the revenue, they beat guidance. Just a fantastic earnings report. So I'm slightly shocked it's only up 1.5, so we'll see. I won't be posting this until tomorrow, obviously, or today. Technically it's today, but the day after these earnings. So we'll see where this thing lands. I should expect it to be around 2 or 3% up, barring any weird market conditions coming up. Let's look at some of the specifics, again, too, just from their press release. Let's see. So, company posted a 9% increase from a year ago. EPS up 19%. year ago. Also an all-time record for EPS. International sales accounted for 61% of the quarter's revenue. Pretty high percentage. We are thrilled to report Apple's highest quarterly revenue ever and highest EPS ever, fueled by strong demand for iPhone 11 and 11 Pro models, and all-time records for services and wearables. So those numbers just keep growing. This company's insane. It's just a beast. Tim Cook says during the holiday quarter, Christmas quarter, thank you very much, our active installed base of devices grew in each of the geographical segments and has now reached over 1.5 billion people with freaking Apple devices. Woo! We see this as a powerful testament to the satisfaction, engagement, and loyalty of our customers, and a great driver of our growth across the board, which makes sense. People who get Apple products, they tend to stick with Apple products. There's a good reason why they're expensive. They're a little bit more expensive because they're typically very high quality products. There's no doubt about it. Apple makes a good product. I'm an Android guy, just usually price related because I don't think I necessarily need an Apple. An iPhone personally, there's a lot of limitations that they have in terms of what all's available for them. I usually just buy my phones unlocked online and then put a SIM card in, so that's my thing. Obviously, you can't. It's a lot more difficult with Apple just because it just costs so much more. I got my phone for pretty cheap, but yikes. Who knows? I'll give Apple a chance someday, maybe. Got to get rich first off these stocks, okay? And Apple stocks helping me get there. So our strong business performance drove an all-time net income record of $22.2 billion. Are you kidding me? Generated operating cash flow of $30.5 billion. So they made $22.2 billion in profit this quarter. Are you kidding me? That's insane. Operating cash flows of $30.5 billion. $30.5 billion of cash. This company is insane. These are numbers just absurd. The profit here is wild. We also returned nearly $25 billion to shareholders during the quarter, including $20 billion in share buybacks, which, again, is a helpful part of that share rising, the share price rising, and $3.5 billion in dividends and equivalents. So we maintain our target of reaching net cash neutral position over time. So Apple's providing, obviously, these estimates, which we saw, good estimates. Tax rate around 16.5%. Very nice tax rate. What can I say? What the heck? How are they rocking that? We'll take it. Apple's board of directors has declared cash dividend of 77 cents. Cool. Obviously, there's a link here to the earnings call. Interesting to read that if you haven't. Here's some of the financial statements, which I also want to go into as well. Net sales, and you see the difference here in terms of these net sales from last year over year. What a freaking beast of growth. Grew this thing absolutely a lovely, almost, over $5.5 billion dollars. Love it. Services grew, that's right, $2 billion year over year. Woo. That's fantastic. That's just crazy. What do you say about that? Products rose, obviously, with iPhones rising, services, boom. Interesting, you obviously increase cost of sales because you sell more. So makes obviously good sense there. And we see this net income line where this quarter last year they made $20 billion. This year they made $22 billion. Fantastic. And on an EPS standpoint, we look at the diluted typically. So you see quite an improvement there from $4.18 to $4.99. That's crazy. And obviously here shares using computing earnings per share. A little bit less shares because they repurchased shares. So good for that as well. So that's why that EPS number really rose. That's why I like buybacks. Sales by category. iPhones rose $4 billion year over year. That's insane. Woo. iPhone 11's performing well. Mac decreased year over year. The iPad decreased year over year as well. But you see wearables rose, my gosh, nearly $3 billion year over year. And services rose $2 billion year over year. Very nice to see it. We see these cash and cash equivalents, but I want to look at the year over year one. So $50 billion in cash, okay? Versus this quarter last year, they had 25 billion, 26 billion really. So doubled the cash position, which is nice. If you're looking, obviously, in terms of debt, we want to see this debt. So right now, they have debt. Their debt line is sitting right around 93 billion in total debt, but obviously, that's not what we like to see. But the company's printing money so fast. A lot of this is an accounts payable form, so they really just need to pay some of that off, and I think they will. It'll be fantastic. I mean, the company making money like this, $22 billion in a quarter, takes 2 quarters for them to pay off really, that debt and become cash neutral. So no worries there. I'm excited. So just some key pointers here. Obviously, the iPhone 11 was a fantastic success. I think we have at least a year and a half before we really see the true 5G iPhone come out. That'll be the next time in which you see this kind of growth in terms of iPhone. Otherwise, it's going to be a little bit of a stale market for the next little bit, next few quarters at least. Services is obviously the key for them. I mean, they keep growing services rapidly, and I think they definitely will with their new Apple TV Plus. They didn't give any insight on that I saw. And obviously, there's going to be a lot of users on that just because of, as you saw, that 15 billion user base. Everyone that bought a new Apple product, pretty much, no matter what it was, they ended up getting a year of Apple TV Plus for free. So again, you won't necessarily see the numbers for that until next year this time. So this quarter next year, maybe you'll start seeing growth and even further growth in services because people will have to be paying for their service actually instead of getting it free from buying product. So you'll see services continue to grow. Wearables are huge for them. Really, a lot of that's driven by AirPods. AirPods were pretty much the number one selling item over just the months of November and December for presents. And personal gifts too, could be for themselves. AirPods were number one, absolutely the number one item this year. And you see that in the wearables line. So obviously Apple Watch is performing well, but AirPods are really where they're getting at. That's their goal. They're rocking that out. I mean, it's cool. I have my own wireless earbuds that are not AirPods, but again, cheaper. Paid $30 for them and they work just fine for me, but I live my lifestyle pretty cheap, so no worries there. Overall, this is just a fantastic quarter. What can I say? I'm super hyped for Facebook earnings today. It's going to be insane. There's just so many good earnings. And Microsoft, Tesla, there's so many good earnings. I hope you stay tuned. I'll be making videos on those, so really hope you enjoy.